Snipers, you have to see what's happening. The Bitcoin price right now is we are fully above the most important price at 17,200, which means that this is now the most important support level for Bitcoin. And in this video, there's a lot to discuss today because look at the charts. Now that we're above 17,200, we have officially opened up the door to 19,798. That is the 2018 previous all-time high. Yes, we have some roadblocks on the way, but look at this, Snipers. If we pull up the DXY, an official death cross. Let's pull up the 50-day moving average and the 200-day moving average. The 200-day in blue and the 50-day in red. You can see a clear death cross here for the US dollar, despite the mainstream saying that the US dollar has been strengthening. What's very clearly shown on the charts right now is that over the last 6 months, the US dollar has actually been weakening. As a matter of fact, the US dollar, based on this chart, has topped out on the 28th of September of 22. Notice how the S&P 500 on the 28th of September last year also bottomed out, and we have yet to see any further lows there, and we've only been maintaining price action. As a matter of fact, above the 20-week moving average right now, some analysts are saying that the S&P 500 has flipped bullish because it's above its bull market support level, which is the 20-week moving average. That's just a textbook definition of a major, I like to call it, home base in the market. You want to either stay above the 20-week moving average in a bull market, or if you're below it, you want to get above it to indicate the early phases of a bull market. And because the S&P 500 is above the 20-week moving average, Snipers, we have shifted our focus to the 200-day moving average. And guess what, Snipers? Based on today's price action for the S&P 500, we have now officially tested the 200-day moving average. This is an extremely important video, Snipers, because the S&P 500 right now could potentially reject this 200-day moving average, and that would prolong some potentially sideways price action for Bitcoin. But if we can see a break above this 200-day moving average, that is going to be a major inflection point for the S&P 500. We have to monitor this week. How's the S&P 500 going to react here at this 200-day moving average? As a matter of fact, you can see here the 50-day and 200-day moving average for the S&P 500 are starting to come very close and tight together, about to converge. And it's not a coincidence that this is happening with the DXY showing weakness with this death cross. But I do want to speak to both audiences on this video. We don't want to just address the bulls. We also want to address the bears. Some people are saying that we're still going to be seeing new yearly lows for Bitcoin, new, let's say even all-time lows when it comes to the last 2 years, meaning Bitcoin comes back below 15,000. And if I'm going to speak to the bears of this audience, what I'll say is that is a possibility if the DXY holds this support level, which guess what? It's testing right now as I record this video. So the S&P 500 is approaching a resistance. It is at a resistance level, which means ideally, if it's truly a resistance level, we're going to see a rejection. So to speak to the bears, that right there is a bearish puzzle piece that we're testing a resistance level. We haven't yet broken above it. Maybe tomorrow's video we break above it, and now the storyline shifts. But alongside the S&P 500 testing a major resistance level, the US dollar is also, for the first time since the start of this parabolic rally, testing a major support level, meaning that, as we've been saying on the Snipers channel, the #1 cryptocurrency analysis on the internet, there is a potential the DXY could see one final move to the upside to form that higher high, maybe even a lower high. And if that's the case, for those expecting further lows in equities and in the cryptocurrency market, this move to the upside for the DXY could cause that, which is why not only is S&P 500 extremely important to monitor this week, Snipers, as it's testing the 200-day moving average, but the DXY is also extremely important to monitor, testing this extremely important bull market support level. So ideally, what we'd like to see at this point, if we want equities and the cryptocurrency market to continue moving up, is for the DXY to stay below its 200-day moving average, meaning that the momentum has truly started to slow down for the DXY. It's already clear that the momentum is slowed down, but staying below the 200-day moving average prolongs that momentum slowing down, allowing more relief in equities and in Bitcoin. So what's most important to watch right now, Snipers? Well, I would say, first and foremost, Bitcoin being above 17,204, that is a major support. That is the lower end of the range that we're now in. The higher end of the range actually takes us all the way to 25,000 US dollars. You might be asking, well, why are these numbers on your charts, Naeem? What are these red lines indicating? These red lines, based on the volume profile, are where the most volume is over the lifetime of Bitcoin's price history. And so these are extremely important volume, support, and resistance levels. The yellow line here is the 2018 previous all-time high. And then we have the white line here, which is the market structural resistance of this falling wedge. Yes, those are some roadblocks that are on the way here. You can see right around 19,000 to 19,500, we're going to experience some potential pushback. But if we can start getting towards this 200-day moving average for Bitcoin and break above the 200-day moving average, showing confluence now with the 2018 previous all-time high and Bitcoin's realized price at 19,800, that would be the strongest macro confirmation that it could be wise to be entering into positions for Bitcoin. That right there is for those that want to be patient in entering. 20,000 is going to be your final confirmation. But for those that want to potentially join the party early, the lower end of the range Bitcoin is in right now has a support of 17,200, meaning the price and where it's at right now is extremely attractive because this is the lower end of the range. Now, let's say the rug gets pulled. Let's say the S&P 500 does get rejected from its 200-day moving average. The DXY finds support, not only finds support, but moves back above its 200-day moving average. We start to see some more momentum come back for the US dollar. Of course, that could lead Bitcoin to fall back below 17,200 in the immediate short term. And then the door opens back up to further downside, potentially towards 13,970. That's the bearish case here. If we were to see the S&P 500 reject that 200-day moving average and the DXY to hold its bull market support level and even show some momentum, that would be the most likely scenario. But the DXY just holds the support level, doesn't get above the 200-day moving average. We're still losing a lot of momentum there with the US dollar, and then we could potentially see that S&P 500 move above its 200-day moving average. We're going to get that answer here very soon, snipers, because it's happening right now as I record this video. Now, I want to talk about Ethereum. I'm expecting Ethereum to potentially outperform Bitcoin inside of the symmetrical triangle. This is an extremely bullish pattern here for Ethereum. You can see we also crossed above a major price level at 1277, heading towards the 200-day moving average for Ethereum. And Ethereum against the US dollar, if we look at the 20-week moving average, what you'll notice here is we are currently above the 20-week moving average. Is that not surprising? Because the 20-week moving average is the bull market support or resistance level. Right now, it's a support level for Ethereum. Not with decisiveness just yet because we're just barely above it. But what's clear right now is Ethereum is more closely tied to the S&P 500 than Bitcoin is right now, meaning Ethereum is doing very well in the markets, especially against Bitcoin. That's clearly shown here with the Ethereum to Bitcoin chart. Also in a symmetrical triangle, approaching resistance, about to break out. We're not too far away from some very important levels here for the Ethereum to Bitcoin chart. As a matter of fact, if we just break this market structure here and the symmetrical triangle see some more momentum, we could potentially even form some new yearly highs here for the Ethereum to Bitcoin chart, outperforming Bitcoin. So the Ethereum pairing against Bitcoin is bullish. Ethereum against the US dollar is bullish. Being above 1277 for Ethereum opens up the door to 1760. That might not sound a lot in terms of dollar value, but if we were to just look at percentage, what are we talking about here? We're talking about a move potentially of 30% to the upside. That's the range Ethereum's currently in right now. 1277 as a major support level and 1760 as that major resistance level. This is the range Ethereum is in. Of course, also some roadblocks on the way, like 1440, where we have the 2018 previous all-time high, showing confluence with the 200-day moving average. But just notice here how Ethereum against the US dollar is very similar to the S&P 500, right in between its 50-day and 200-day moving average, which is why we took off that 20-week moving average from the chart yesterday and honed in on that 200-day moving average, because it's a lot more interesting right now than that 20-week moving average. With S&P 500 above the 20-week moving average, it could just be a false indicator there. So the 200-day is really what we're watching here for the S&P 500, as we talked about yesterday. So very interesting time in the markets. I'm going to wrap this up for you snipers in just a second, but I do want to mention this. The total market cap, unlike Bitcoin, actually had the chance to test the 200-day moving average as well, and has also been rejected by that 200-day moving average. We have not crossed above it. We still have a ways to go, but what's very interesting and different about total market cap versus Bitcoin's price is we've held up the 2018 previous all-time high as a support throughout this whole bear market. We have not yet at all crossed below this extremely important support. So total market cap, really, if this were to hold as a support, is at the lowest part of its range, where we could only expect some real upside here. What if we see this play out here? We see a double bottom type of formation. Total market cap gets back above $1 trillion. That's a big even as well. We're just slightly below right now at 800 billion in market cap. Total market cap, something to watch. Bitcoin against SPY, also something to watch on our radar. We've yet to get some decisive answers yet, but we sort of have the early formations of an ascending triangle here for Bitcoin against SPY, as we mentioned yesterday. So we want to monitor this market structure because that could lead to some outperformance there for Bitcoin against the S&P 500. And just to wrap up some things that I saw in the headlines today and some fundamental analysis, this Grayscale Bitcoin Trust is back to the same discount that it was at in November of 22. Why is this important? It's about a 38% discount right now based on the amount of Bitcoin the Grayscale Bitcoin Trust holds. We're seeing a very sharp move in the discount for GBTC. I think it peaked around 43 to 44% discount right around December of 2022. And just recently, over the last 24 to 48 hours, we went from around a 43% discount to only a 38% discount. So we saw a massive leap there. And you can see that actually with the GBTC chart. You can see a big push to the upside. That could mean several things. That could mean that there's a little bit more confidence here for GBTC. I know there were some rumors going around saying that it was illiquid, but this is a very positive sign here. It means that institutions are actually using GBTC right now to accumulate some Bitcoin as they see it as an extremely attractive opportunity within the Grayscale Bitcoin Trust, as it is around a 40% discount, now only about a 38% discount. But we did see a major shift in that percentage as of the last 48 hours. So I wanted to bring that up, snipers, and that is a very positive sign. And I've been saying this, snipers, 2022 was such a bearish year, but 2023, based on the charts so far, gold, China's traditional markets, the S&P 500, even Bitcoin, 2023 has been a great year. Look at this. As soon as we hit 2023, we've pretty much only seen green candles here for Bitcoin. We've seen a streak here of green candles. And so 2023 so far, based on what we're seeing on the charts, given at face value, has been a very strong start to the year. And so the mainstream media is always going to be delayed, right? By the time inflation was already an issue, that's when mainstream started to talk about it. Now we're starting to see some of the smartest minds like Cathie Woods talk about deflation, something that the mainstream media is not talking about. The mainstream media is saying that the US dollar is so strong, it's strengthening. Why aren't they talking about the US dollar over the last 6 months weakening, having a death cross here over the last 3 days? We just experienced a death cross for the US dollar. Why isn't the mainstream talking about this? Because they're delayed. Markets are forward looking. They're going to price things in first, right? Before you can realize some of these things, the markets are already going to price it in. And so we have CPI data coming out tomorrow. That's the last thing I want to talk about, snipers. We're expecting about 6.5% overall CPI. If that comes lower than expected, let's say we see 6.7%, that could be bad for the markets. 6.5% is quite a hefty goal right now. I think last month, November's CPI report came in at around 7.1%, and they were expecting like 7.3%. I mean, don't quote me on these numbers, but what I do know, 6.5% is the number to watch for tomorrow, 8:30 a.m. Eastern Standard Time. The CPI report comes out. We can expect some volatility on the shorter time frames. What I would expect, honestly, because we're so close to these major levels, snipers, is usually what happens during CPI reports is we magnetize towards these volume levels. So Bitcoin's way above 17,204. Maybe we see a short-term move to the downside, actually, towards 17,204. Maybe even test below it, test it again as a resistance, just to confirm it as support. So expect some short-term volatility because of the CPI report, but that's not going to change the macro. It's not going to change the overall direction of what we're experiencing here with Bitcoin. The point is right now, snipers, is we are potentially approaching an inflection point this week. And the reason I say that is because what we have to monitor over the next few days before the market closes, it's only Wednesday, we have 2 full business days left, is whether or not the S&P 500 is going to either reject this 200-day moving average, or is it going to show strength and break above the 200-day moving average. You're going to see headlines if we do see a break above the 200-day moving average. We've actually come above it a couple times already, and what was interesting about the first time we came above it is we also broke the bear market resistance level. But then if you were to observe the daily candle that closed above that bear market resistance level, as I always teach you guys here on the Snipers channel, is we had bearish candle symmetry. And so that candle right here was an ugly candle that led to an overall rejection, even though we saw some short-term price action above that resistance level. So we'll have to also monitor something like that here at the 200-day moving average. If we do break above it, is it just a fake out? How's the candle symmetry? Is it a bullish continuation candle slicing right through? A rush of liquidity coming in? If that's the case, that's the best case scenario. See a nice, big, nice green candlestick there instead of some large wick. That's what I'm looking for here with the S&P 500. But the point is, we have to monitor the S&P 500, and then the inflection point, because the DXY is at the bull market support level. What is it going to do here? Ideally, a support level acts as a support, and we see some upside. If that happens, we have to be careful, because that could lead to some more sideways price action or even some further lows for the overall markets, including Bitcoin. But I would say that I am expecting the DXY to hold here. What I really want to see is whether it can stay below or above this 200-day moving average. If it stays below it, that's actually a very positive sign. It buys us time to see some further upside. That's the inflection point we're waiting for here for the DXY. And then to wrap up this video, snipers, I will say this. Bitcoin right now is playing inside of the range here with a support of 17,204 that we have to maintain above. We are approaching the first roadblock right now, which is this market structural resistance of the falling wedge showing confluence with the 20-week moving average. That is the first upside target here. 18,400 is extremely important. We'll actually write it down here on the charts. 18,400. That's roadblock number one. It's actually a very weak roadblock, but it is a roadblock. And even the next roadblock above that is quite weak here at 20,000. I would consider this a very weak roadblock. These are just psychological numbers. They don't have any significance when it comes to volume, but these are two roadblocks right now on the way for Bitcoin. We have 17,204, major support, 18,4, first roadblock, 20,000, second roadblock, but the real target right now is 24,300. This is going to be what potentially flips us back into a bull market or ends up prolonging this bear market. So 24,300 is what I'm waiting for. That's what I'm watching. If you were to say, Naeem, what's your expectation for Bitcoin if it stays above 17,204 in the next 30 days? I would say that at any point, I think we can hit 25,000. Does that sound unreasonable, snipers? When the same day that we breached below 24,300, we saw 17,600? Doesn't sound too unreasonable to me. This is the price range we're in. Bitcoin has shown volatility in this range in the past. It was very clear the first time we breached below 24,300, we went straight down to the lower part of this range. That's how this market works. Nothing is unpredictable. Everything here leaves clues. Everything has hints to it. We have the number one technical analysis on the internet. The bear market is the best time to invest in yourself. It's the best time to learn the charts, learn the assets that you want to invest in so that when the bull market comes, you are prepared for it. This is the time to invest in yourself, snipers. I know each and every one of you invest in yourself. We have the number one community on the internet, number one cryptocurrency Discord on the internet, providing the best education to you guys. And with that, thank you all, snipers, for tuning in to this Wednesday update. I hope you like this new style of video. Remember, snipers, if you do like this video, subscribe and comment below. With that being said, snipers, 17,200, the most important support level for Bitcoin right now. And then we have 19,800 as the first major roadblock other than that 20-week moving average. And CPI reports coming out tomorrow, 6.5% expected. Let's see what happens with that. Only expect some short-term volatility because of that. Nothing too significant in my opinion. And other than that, we'll monitor the S&P 500 for you guys throughout this week as it is approaching that 200-day moving average. A break above that would be a massive inflection point for the overall markets. The DXY at a major support level. Let's continue to monitor it. And with that, that's a wrap. Until next time, snipers.